I believe that we have some settings problems, so just a second. So now it's all good, so we may continue. Alex, first of all, I would like to thank you for such an amazing opportunity for the Ukrainian startups to get the knowledge from you. We will start with the lecture, and after that, we will make a Q&A session with our participants. So Alex, the floor is yours. Please share your presentation and we may start.
Fantastic. Well, thank you very much. Pleasure to be here with everyone. I will just share my screen. I'm not very good at using Zoom, so bear with me for 2 seconds. Right, I try and hide this. Great, I'll keep that down here so we can keep going. Yes, well, thank you very much, Karina, and to Ukrainian Startup Fund for inviting me. As you've heard, I'm Alex. I'm one of the co-founders at Kaiku. As you've already heard, we built a piece of software that does sourcing for venture capital funds worldwide. These typically are focused on corporate venture funds, family offices, and smaller VCs. So we do a lot of analysis and deal discovery and finding startups for a lot of funds worldwide that want to invest into new markets. We do a lot of emerging markets work as well, all the way from Latin America to Asia Pacific region as well. And so we've gathered quite a lot of insight over the number of years now of how to support companies coming into the UK, which is the secondary part of our business, which helps a little bit more on the commercial side, tax to a degree, and bespoke fundraising support as well. So yeah, we'll go through a little bit today. I'm going to talk to you a little bit around the sort of tax schemes in the UK, the benefits of funding, how easy it is really to set up your company over there if you are looking at that, or as I imagine a number of you are looking to raise capital there as well, and a lot of the government schemes that sit in the UK as well. We have a really great grant environment. We have a lot of free funding, but most of it requires to have a company in the UK. But you can do that in 24 hours for about £20. So it's fairly easy to do it, and you don't actually have to be there to do it either. So we'll have a little bit of a look at that as well. And I'm also going to be talking about the whole UK. So I'm not just going to be talking about London in the southeast, which is where I'm from, but we've got a huge, a country outside of that with cities like Birmingham, Edinburgh, Cardiff, Manchester, with lots of other local funding opportunities and fantastic regional climates and outlooks as well. So that's how we'll continue on that basis. So please do write anything down you want to pick up with at the end, and would be delighted to answer any queries that you may have there as well. So we're going to start a little bit looking at the entrepreneur ecosystem. Now, this slide's a little bit out of date because some of this was centered on the pandemic and in terms of when funding in the UK was falling off, but it's still relevant because I still get asked quite a lot. But Alex, with the current economic climate, with what's happening in the world and the results of things like Brexit, hasn't funding fallen in the UK? Well, funnily enough, no, we get about 60% of our funding in the UK from foreign sources. So from the Middle East, from Asia, and predominantly a lot of that is from the United States. So it's one faux pas, I think is probably the way of saying it. One thing I always try and say at the beginning of these presentations is we are one of the world's capitals in London and across the UK for receiving venture capital from overseas. A lot of our infrastructure and a lot of our teams come from overseas. We have a lot of foreign co-founders, and it's a fantastic environment to work in. I am obviously a little bit biased towards that because I am British, but most of my work is working with foreign funds and foreign companies to help them in that analysis and move that over as well. But as I said, we've got a big nation outside the rest of London in the southeast, and it's definitely worth looking at that. But we'll get a little bit more into that later on and looking where that funding does come from as well. And we could, I always talk about the funding options here, and the 6 main that I'm going to touch on today are the angel investment environment, family offices, venture capital, debt and loans, crowdfunding, and the grant environment in the UK. Now, I'm sure you wouldn't want me to, but you could do a presentation on each of these just on the UK. You could do an hour on angels, an hour on family offices, an hour on VC, but we don't have that today. So I've got to give you a summary of all of them, but it's worthwhile knowing how it works in the UK and what all of these different funding sources or angels and VCs look out for. and some of the sort of things we've learned over the years working with foreign-led companies coming into the market that you need to be aware of too. So in terms of angel investors, we have an association called the UK Business Angel Association that is definitely worth knowing of. And I'm bringing up a few links just so you can be aware when we go through this presentation of some resources that might be useful for you as well. So this is our industry body in the UK for managing business angels. We have 650 members in that association. What does that mean? That means that we've got lots of different angel groups, and a lot of them are centered in different parts of the country. So you'll find some in Wales, you'll find a lot in the southeast, but they do a lot of local group investments. So you get a lot of them with universities, a lot of them with research parks, and there's a very big environment for that. But why am I mentioning it to you? Well, something that I'm going to talk about a little bit later on is the tax environments. And the UK has two schemes that help with de-risking investments for angel investors and VCs, which we will touch on more technically later. But what you need to know for now are what these are called. They are called the SCIS and the EIS scheme. So Seed Enterprise Investment Scheme, which is what we're going to be talking about a little bit now. Now, it's hugely relevant because if you're a company, the rules changed a little bit a few weeks ago when we had a financial update in the government, which you might have been seeing recently. But as a early stage company in its first 2 years of trading, you can raise up to £250,000. And for that 250,000, the investors get a reduction. They get effectively a refund of 50% in tax. Now, there are more specific rules that come into that. But the point is that an angel investor could put 100,000 into your company and get 50% of that refunded. But that's in your first 2 years of operations. There is another scheme called the EIS scheme, so the Enterprise Investment Scheme, which allows that to happen for trading up to 7 years. But the refund that they get is 30%. So most of the time when this happens, you have to have a parent company, so your top company in your company structure in the UK for this to work. The money's got to flow down. Now, there are rules around this that can get a little bit technical, but the simple rule to look at this is as long as you've got a parent company there in the UK, you can keep your subsidiary or your branch or something overseas as long as the flow of money is coming through there as well. That's the rule. And why do you need to know this? Well, 2/3 of angel investment in the UK utilizes this scheme. So basically, you could be an overseas company setting up a structure there with your parent company in the UK. And most of the time they want this tick. They want to say you're SCIS or EIS eligible to be able to receive funding. Now, we will talk about the process a little bit later on, but you definitely need to be aware of that if you're looking at raising funding from UK investors. Now, that does apply to some VC funds as well in the UK that have their office and their structuring in the UK, but not all of them. So you can obviously set up a company there and raise funding from Holland, from Spain, from France, if there are investors there investing into the UK, because they don't get those tax incentives. But it's definitely worth knowing of that. And the UK Business Angel Association is a very good resource with a lot of events to work with as well. Family offices, I will touch on a little bit, not too much, but these are private structures for high net worth individuals. Most of them are based in an area of London called Mayfair, where a lot of them are quite, because I think what the word is, there's not much, information on their websites. They're quite secretive. But over the years, there's been a big change in the UK landscape for family office vehicles and high net worths investing earlier. You probably would have found 5-10 years ago, more of them were doing growth investments, property, asset management and things like that. But we are seeing a lot of them at the moment invest earlier. So it's worth keeping them in mind if you ever do come across them or talk to them or meet them at events. But they can be a little bit more secretive. So again, and a lot of them are just starting out in this sort of territory. So they have smaller portfolios of VC-led investments and startup investments. And if they are, you want to do your due diligence on them as well, just to make sure they are the right partners for you, but definitely worth knowing of. VC, we've got, and I always get the number wrong, but there's probably 500 or 600 funds in the UK. We have a big resurgence at the moment in newer funds coming up across the UK. So I typically split this into sort of your typical VC structure demographic and more so of the corporate environment. And there's a few ways to look at this. Most of these funds have been earlier stage funds that might be raising 5, 10, 20 million pounds per se, which in the UK landscape, compared to some of the larger funds that are operating, like Octopus Ventures, for example, is smaller. So we are seeing lots of changes in the VC environment at the moment and lots of smaller funds coming up. A lot of them working with ESG related endeavors, a lot of them working with social impact, a lot of them working with culture, which is great. But most of them are focused in London. But you will find a handful in Edinburgh, Manchester, Birmingham as well. But it's worth knowing when you start to look at funds outside that, they typically receive funding from an organisation in the UK called the British Business Bank. This is a public funding body, which again is worth knowing of because they do provide support. But a lot of their funding again means that you've either got to have if you're you've got to have your entity in the UK to be able to receive this in that respect. And if you're looking more regionally at other locations in the UK, you might even have to have your address of your company in Birmingham or Manchester to get local funds from there as well. But it's definitely worth knowing of that as well. A few other organisations worth knowing of, actually we'll touch on a little bit later on, are Scottish Enterprise. So we've obviously got, I should have opened these earlier, but let me just open them for you now. So we've got quite a lot of public financing, but we have a structure in the UK. It's not working, but anyway, you can see it. We have a structure in the UK called the devolved administrations. What do I mean by that? We have England, Scotland, Northern Ireland, and Wales. And each of the devolved administrations, the devolved governments per se, so the Welsh government, the Scottish government, and the Northern Irish administration, have their own equity funds. The one in Scotland is called Scottish Enterprise, and I'm raising this with you because you can still get a lot of benefits of having a company in the UK. There are nuances in Scotland because the legal environment is a little bit different, not that different, but you can get a lot of public funding up here as well. Development Bank of Wales is one of them as well, and the other one is called Invest Northern Ireland. And these, even just for having a look at them, will provide lots of resources for setting up in local environments. Scotland's particularly good for things like robotics, AI. In Edinburgh, if you're looking at energy, shipping, marine, maritime, obviously Aberdeen has a lot of that going on. Invest Northern Ireland, arguably potentially a little bit more difficult for the current environment, just with everything that's been happening with the EU, but the Development Bank of Wales is definitely worth looking at as well. So I want you to be aware of those. Debt and loans can be tricky, but there's a very good platform called Swoop Funding, which I highly recommend if you do get to the point of having a company set up. This is a portal for lots of different types of funding, so predominantly business loans and grants as well. And you will see some other options here, but we'll talk about these a little bit later on. But they're a very big portal for that as well. We've got others like Virgin startup loans that come through. But again, you've got to be super aware of where you are setting up your business, because a lot of them will want the company already established. They will want that cash flow. Or if you're in the fortunate position to move some capital over to the UK, that is showing that you are putting people on payroll, you're paying some suppliers, for example, you're getting early revenues in. This will help this. So it can take a little bit of time to get this started, but it does exist there as well. Crowdfunding. I mean, some of you might be aware of platforms like Seedrs and Crowdcube, two of the world's largest crowdfunding platforms. Swoop, we just spoke about. These are London headquartered, and we also have Funderbeam, which you might know of, which has other operating locations in Europe and Estonia too. But these two are definitely worth looking at. So if you're doing anything B2C, D2C related, and you have a lot of traction, to work with these companies, as far as I know, but don't quote me, you don't need your company in the UK because they're both doing lots in other European locations at the moment, but they can be very good options if you're raising sort of D2C or B2C led money as well. It's not exclusively on that, but it's worth knowing of that as well. Grants, we have a fantastic grant environment. There are many different organizations that work on this. I will talk about them in more detail a little bit later on, because I have a specific slide on that. But again, my word that I always use here for advice is be very careful where you're setting up in the UK, because it can have a huge effect on how you receive debt and loans, sometimes VC investment and grants as well in that respect. And these are some of the main platforms. Obviously, I'm biased by putting Kaiku on there, that are worth knowing of as well. And this is just touching on a little bit earlier on what we were saying. So yes, we have a lot of very good funds in the UK. We have a number of funds that invest solely in UK-led companies, but most of our capital, as we mentioned earlier, 63% of that, 2020, came from abroad. And I'm pretty sure if I got that number in 2021, I'm pretty sure that number is going to be higher than that. We have an organisation in the UK under the UK government called DIT, the Department of International Trade, and it's their sole purpose to make sure that they're helping companies like yours. We work very closely with them in certain locations to set up in the UK and bring more capital and resources into the UK. So there's nothing to be worried about here. But this is what I was mentioning that is really quite critical to understand is if you want to come into the UK, and most, we understand it. I understand it because I'm from there. You want to set up your company a lot of the time in London, lots of capital, lots of VC funds. Good to have an address in London. And I appreciate that. But you've got to consider the rest of the country, especially when you are resourcing funding options. And for example, in Cardiff, down here, the capital of Wales, very good with space technologies. As I mentioned with Edinburgh up here, robotics and AI. You could be in Aberdeen, looking at maritime. Every location is different. Birmingham's doing a lot in the creative industries at the moment. In rail, we have a very big high-speed rail network project called High Speed 2 that's been going on for quite some time. But the whole point is, if you come into the UK and where you want to be able to set up, and we can help you with things like that, it can definitely open up your grant opportunities available. So, for example, if you were coming into Birmingham and you went, actually, I know they're doing a lot in creative industries and I'm working in the metaverse space, for example, or anything that's related, or film and TV, for example, and I'm only using this as an example, and there are lots of public funding opportunities aligned with what they're trying to do in the region. So it should be hopefully quite obvious. But if you have your address there, there's then government incentives to invest in those companies that's coming in. So yes, that can be equity, but most of the time it's more grant and debt grants, and there's a lot of those, and debt facilitation. So just make sure that you're doing your research. Now, there's an organisation in the UK. There's lots of organisations that help foreign companies in the UK, but one of them is called Tech Nation. And that report I was just referencing there is the Tech Nation regional report. So if you are looking for specific ideas of where, you can see where most of the capital comes in from. It's the United States, as we've mentioned. But if you've been looking a little bit more, you can look through this report to understand specifically on the regional landscape and what regions are strong at particular things, which is probably the first thing you want to do before coming in. This is probably, hopefully, the most useful slide of the presentation. The four main schemes that, if there's anything you're going to take away from today, I want you to remember these. The first is the SCIS scheme, which is what I mentioned earlier, tax incentive scheme that powers most of our early stage investment in the UK. As I mentioned, for angel investment, that's about 2/3. For VC, it really depends. VCs might have their structure in the UK, and their investors, so they're what we call LPs, limited partners, might claim the tax relief. So that fund then has to invest in UK companies with this tick box. But as I said earlier, if you can't get it for several reasons, but most of the time we work with companies to help them get that authorization, it's not the end of the world, because you can still access the grants, you can still access the loans, and there are obviously lots of funds from overseas investing into the UK that's worth understanding about as well. The second scheme is something what we call R&D tax credits. I believe this was about 20, 25 years ago, the UK wasn't fantastic at investing back in R&D. We were lagging behind a lot of other nations. And so what the government did at the time was brought in a scheme which essentially provides free tax refunds, free refunds on money. The easiest way to think about this is if you're spending £100,000 on innovation, on R&D, this could be something to do with life sciences. You could be discovering new drug discovery. You could be making a platform like ourselves. The point is, if you're spending £100,000, you get a third of that back as a tax refund for free. Now that there are specialists who deal with this, and we can obviously help put you in touch with some of those. But the point is, at the end of the day, lots of them allow you to claim money for free. So it's a bit of a no-brainer for having another reason for having a company over here in the UK. There are exclusions, but the fact is, if you have your company there and you're paying contractors in Ukraine, you can still claim on that as long as the money flow is coming through. So yes, another good way of attaining basically free money over there as well. The LEP network, this was about 10, 15 years ago when we had an old coalition government in the UK between the Conservative Party and the Liberal Democrats. They were looking at establishing a way to get more money outside London and into the region. So they formulated something called the LEP network, which is what we call local enterprise partnerships. So in England specifically, we have, if I'm not mistaken, 38 of these. And every local authority, in terms of when it manages say startup resources, startup money and local funding will go through a local enterprise network. So if you are looking to where you want to set up, the Tech Nation report is a very good place to start, and just in terms of understanding where you might want to go. But these locations are even better. So these are effectively government authorities, local government authorities, and it's their sole purpose to work with you to help to set up. Now, yes, there are 38, and it's pretty obvious that most of the funding will go to ones like Birmingham, Solihull, Leeds, Manchester, and the bigger cities. But that's not to say that the smaller locations aren't a good place to look, because it really depends on your industry and what you're looking for. But once you've found where you're going, have a little bit of a look at the environment over here, and that's a really interesting way to understand how you can get local funding, and they will help you. They're very good people at most of these organizations, and it's their purpose to get you funding to go through as well. So just be aware of that. Innovate UK is the last organization I want to talk about. Under the UK government. Where's my link for it? Is this it? No, I think, here we go. So it's the UK's National Innovation Agency. So the Innovate UK provide lots of funding opportunities for companies, and I must say in a lot of different sectors. The last time I looked, most of it was grant funding. There can specifically be loans sometimes as well, but you can find about funding opportunities down here. And as far as I know, there's about 160 different funding opportunities open at the moment. And for some reason, my internet's not working, but you can get the idea of where I'm going with this. So you can search Innovate UK as well. Most of them will want you, I'm pretty sure all of them require you to have a company in the UK to receive that funding. The point of this is saying the tax incentives, R&D, local enterprise partnerships, and Innovate UK, there's a multitude of free resources and money that can come through. Now, it's not always easy to get it. It's easier to start by working with a LEP network, get your company set up, and then look to the tax if you are looking to raise funding in the R&D. Innovate UK can take quite a bit of time. There is a lot of funding. It can go from the tens of thousands to the millions, if not more. And especially a lot of these are purpose-led at the end of the day. So a lot of them will work with organizations in places like Ukraine and emerging markets to make sure that the funding is coming to the businesses that need it most. So definitely worth taking that away. And obviously, if you want further help on this, we can talk about that. Very happy to help. I'm just going to talk a little bit more specifically about SCIS. Not too much because it can get quite technical, and it is a tax incentive scheme, so it gets quite legal as well at the end of the day. But lots of people come to me and go, Alex, got a company overseas. I want to set it up in the UK. I've discovered where I want to put it. And I go, great. And they go, I want to set up a SCIS. And I go, okay, fine. They go, but I've heard it's a really hard scheme to get. And I go, well, it depends. The process is split down into this. So you fill in a form, you fill in a cover letter that we typically draft and fill out. You have a very basic profit and loss, 3 years forward looking. We most of the time give people templates to fill in and just need to move around a few numbers. You have your pitch deck, which I imagine most of you have one. You add a few disclaimers to it, and then you've got to give options of grant funding and also show your cap table, as in who's invested in you. So there are some exclusions, as in law firms can't apply for it. It gets difficult with property development, agriculture as well, and some others. Now, I say financial services, but it's important to clarify the definition here. Typically, if you are building, let's say, a payments gateway or an open API or open banking or something like that, you're absolutely fine. Fintech gets more difficult when you are managing funds in escrow, debt facilitation, and things like that. If you are typically, for most of these at the end of the day, if you are building a platform that is facilitating support and is innovative, you'll be absolutely fine. I do tell people, though, if I think there's something we need to check, and then I talk to HMRC, the government's body department that deal with this as well. We spoke about the exclusion rules earlier for 2 years and EIS. So it's worth remembering this, because if you've been making money, even overseas, for more than 2 years, you can't qualify for that in the UK because it defeats the purpose of the scheme. And it's the same with EIS. But EIS is a very big scheme in the UK as well, and you need to know about that. So it's worth coming through. And the easiest way is to have your company in the UK, because otherwise you need to have your essential, substantial part of the business operating in the UK as well. And this is what we find with a lot of investors. A lot of them want you to have a little bit of commercial traction in the UK, just to show proof that you're coming through. That's the main thing. Not always, but it's worth noting that in that respect. There is a good platform in the UK called Seed Legals that's worth knowing of. They're a legal tech tool that help with a lot of this. But the reason I put this slide in is because the amount of equity that you give away in any country in Europe is always varying and can be different. Based on their data, and I think this is a little bit old and I probably should update this, but it's about 15, 16%. I think it could be 14.7 specifically. But if you're on your first round of funding and doing that in the UK, just be aware that that's how much you could be looking at giving away. So yes, people give away more, but it makes you less investable in the long term if you've given away more equity. So it's worth knowing that as well. In terms of knowing your position and company valuation, this changes by every country. We are not a country like the United States where the money goes in very early and the valuations are ballooned. But we do have valuations typically, and I say typically, higher than a lot of the rest of Europe. A lot of other European countries have been catching up with this, but if you are revenue generating, you could potentially be looking at sort of a 2 million pre-money valuation as well. And that's quite interesting to know. And again, this is based on credible data from Seed Legals. The last thing I'm just going to touch on now before we go into some Q&A is how to understand your investors. And the first thing I'm going to show you on this is a good platform called Landscape. So Landscape is like Trustpilot for venture capital. So whilst we do have a lot of very good investors in the UK, you don't want to be obviously wasting your precious time going around talking to investors that might not actually have the money they say they do, or be taking you through a very long and arduous process. It's just not what you want. So Landscape was built as a resource like Trustpilot to give reviews on VCs. So you can get a review on a certain fund, and it's before engaging with them, I highly recommend you to use it to just understand what's going through. You want to be really clear with the fund if you're talking to them, what their term sheet is, what the conditions of investment are. Don't have a competitive portfolio. So, they're not just doing competitor research on you, for example, because believe me, it does happen. Unfortunately, there's a lot of really good people in VC in the UK, but equally there's others that probably need checking out on platforms like this. So, do your checking there as well. When I say LPs, it's worth knowing where their money's coming from. So a lot of funds in the UK will receive their monies from corporates, like places like Investec or Aberdeen Standard Investments, large pension funds, life insurers, and other typical asset managers like that. Now, if you're operating, this is just an example, but if you're operating in fintech, for example, and there's a private fund that has a bank that's invested into it, that's quite a good thing for you, because that bank potentially could be buying you out in the future. It's in the fund's interest to invest into you in fintech, for example, and that bank is a very good relationship, and that fund in between will want to make sure you all get on. So ask questions about where the funds get their money from. A lot of it will be either British business bank, as I told you earlier, private money, family offices, high net worths, but a lot more of it is coming from the corporate world. So it's definitely worth knowing of that. Fund depletion. Fund depletion effectively means that a typical fund will put, if it's got a 30 million fund, for example, 50%-ish is normally reserved for the investments, and 50% is reserved for what we call follow-on investments. So following up to the best performing companies that are coming through. And it's worth understanding and asking the funds where they are in their what we call fund life cycle, because if they are at the end of their fund life cycle and they haven't got any more money to invest, you'll be wasting precious time talking to them, and that fund might not be able to guarantee to invest into you. And again, unfortunately, this happens a lot because funds sometimes will be raising their second or third fund, and they need to show to their limited partners that they can get deal flow and they can get really good opportunities, but they might not necessarily be able to invest. So you've really got to balance the expectations out there as well. SEIS structuring, well, hopefully you understand a little bit of the importance of that scheme in the UK now. Going back to my point earlier was, a fund in the UK, a VC, venture capital fund, might have some of its investors that have claimed that tax relief. If they have, that fund can only invest in UK-led companies, more or less most of the time. As I say, always, not always, but you need to make sure if you need that SCIS accreditation, the EIS accreditation as well, or not. Just be super aware of that. And portfolio, I sometimes talk to founders and they'd say, Alex, I'm talking to this fund in the UK, and go, great. I say, have you looked at their portfolio? No. And they go, no. And I go, okay, why not? Because sometimes these funds might have already invested into a company like yourselves and just be using you for competitor research, which again isn't great. It's going to waste your time. They're probably not going to invest into you. They could have a conflict of interest. And then you've just wasted a lot of precious time going through with that. So again, in that respect, just make sure you're balancing your expectations of the fund and don't be afraid to ask them. But you can get a lot of this information usually from the site on who their investors are and what their portfolio is. And only at that point, is it worth following up in that respect. So the whole point of this was to just give you a little bit of a flavor more than anything. As I say, a lot of this can get quite detailed, very specific. If it's anything focused on the regional landscapes, funding, obviously, that's mostly what we do. But obviously the SCIS work, be very happy to talk to you further. I know you're going to receive a email later with my details in it. That's my email, but you will receive some instructions later on. And would be very happy at this point to receive any questions that you might have. And thank you very much for your attention.
Yeah, thank you, Alex, for such an interesting and informative lecture. I think we can move forward to the questions from our attendees in order to strengthen the gained knowledge. So in case you have any questions, please, you are free to ask.
You can either come off mute, put them in the chat, or follow up afterwards. I really don't mind. But.
Yeah, I believe that all of our attendees should think about all of the information that they gained today and will be able to ask us to give you the questions or to reach the Kaiku directly.
Oh, we've got a hand.
Sergey, do you have any question?
Yeah, I have a question. Thank you, Alex, for the presentation. The chat is not working, that's why no questions. But my question is, how much it takes to CIS compliance to finish? And
sorry, can you repeat that?
How much it takes to CIS compliance to finish? So, if
do you mean the time?
Yeah.
So HMRC, the government's body in the UK, will typically tell you if you apply to them, a process takes 4 to 6 weeks. I've had applications that I've helped reply in 48 hours. And it's very cyclical. So there are certain times of the year with there's tax deadlines, for example, that can make the process a little bit slower. But if we work with people, we typically try and get the work done in 1 to 2 weeks and submitted by that point. So if you're an overseas company, it can sometimes be a little bit more complex, just going back to those rules about trading 2 years, 7 years and things like that. But more or less, it doesn't add, I think for the stage where businesses are on this, I could be wrong, but for where I think the companies are, it shouldn't be too complex because you'll have most of the details that you require. But you ideally need that company set up in the UK, but that you can do that in 24 hours on a platform called Companies House, which does it for about £20. So.
Okay, that's clear. And the second question is how everything is changing in government in UK right now according to funding and how to track it?
Yeah, really good question. So a couple of weeks ago, you might have seen we had a financial budget in the UK. One of the changes that they brought forward was increasing the SCIS limit from 150,000 to 250,000. We had another update on the budget with our new Chancellor, Jeremy Hunt, about 7 to 10 days ago, if I'm not mistaken. I think it's fair to say 90% of most of the changes they brought in were completely wiped out because the markets didn't like what the government was doing. And we've obviously had political changes since then. But one of the changes they did keep was the SCIS change. So it's good for startups in that respect because you can raise more money with more tax incentives because it hadn't been changed for years and it hadn't accounted for inflation and everything else like that. So flow of money, as you saw on the graph, is just going up year on year at the moment from foreign sources. Most of it is from the United States. A lot of PE funds, a lot of buyouts, and we see a lot of that at the moment. I mean, the exchange rate isn't fantastic. So actually there's a lot of companies being bought out in the UK because it's quite cheap for American funds to do it. So if anything, it's fairly positive. Not perfect, never perfect, but it's fairly positive.
Thank you so much.
Pleasure. Anyone else have any questions? Otherwise, as I say, very happy to follow up afterwards. I know I speak very fast and I know lots of these get quite technical, so I appreciate that.
I believe anyway that all of our attendees will walk through the lecture once again on our YouTube channel and we will get back to us or to you directly.
There is one more hand up, Karina. There is one more hand up.
Okay, so we can move to that. Dash Camille, Alexei Afonin. Alexei?
Probably the problem with my earphones. Can you hear me now?
Yes.
Yes.
Yeah. Thank you for the lecture. It was really interesting to learn a lot of the details. The question is the next. We are now at the stage of negotiations to launch the pilot project. Okay, and it is the question. I think that it might be necessary for us to register the company in UK in order to, proceed with the pilot project. And here is the question. We probably will not be generating any money. So it's interesting for me to know how much does it cost to finance like minimal status of the company, like, being registered in UK.
That's a really good question. I mean, the setup, I think you're talking about maintenance as opposed to setup. The setup is about £20. It's on Companies House, which can easily be Googled, and you can set it up. Now, there's a thing in the UK where, like most countries, where you can keep the company what we call dormant. So it can be open, but you might not be actively trading, but you've still got a Companies House number, you've still got an address. I mean, the costs that you typically have to consider are having an address in the UK. There's a company called First Formations that do company registration that I normally direct people to. And I know many businesses overseas that have used them. That process, if I'm not mistaken, is about 200 or 250, but it includes a year's worth of using their address in London. We actually use them ourselves. So I don't get anything for telling you this. I've been using them for years. So that's a good company to go with. Accounting wise, if your company is dormant, the accounts that you file will be very simple. People can do them themselves. I generally don't recommend doing it yourselves, but finding an accountant to manage that, again, I'm happy to have another chat about it. You're probably looking at something like £500-600 for dormant accounts for less economic activities. If you're doing much more and you've got cash flow coming in, that can probably go to more £1,500, £1,600 in that respect on an annual basis. So.
You mean 1,600 is like a yearly payment or monthly?
Yearly, yearly. So the upper
okay.
limit. Okay. If you're doing less, you can probably look at sort of having a dormant company, sort of 500-600 yearly. Mm-hmm. So.
Mm-hmm. And can I ask another question?
Please.
We are focusing on getting some funds from the NGOs or some organizations that provide grants. And do you have the experience in this area? How much time does it usually take to get the grant? Because usually it's a very, very long and, exhausting procedure.
It is. So there's two answers to that. The first I'll say is, and it's not directly answering your answer, but organizations like Innovate UK, I have through other companies had Innovate UK funding. It can be quite arduous, long, as you say. There's a lot of, it's government money that, there's a lot of boxes you have to tick and everything that goes through. But it works and the money's generally free, so it's not a problem. We've got partners that we work with on the NGO side that we can put you in touch with, of course. But the reason I'm giving Innovate UK as an example is because, again, as you say, a lot of it's more political money or government orientated. You will have the same time periods coming through. So what we normally recommend is working with one of these partners to do the preparation of the application, because a lot of these grant organizations work with the government. And if they're trusted, there's more of a chance that you'll get the funding.
And do we have to be registered in UK when apply, or we can be Ukrainian company who applies and preparing for the pilot project in UK?
It really depends on the organization giving funding. So for organizations like Innovate UK, yes, you need a company in the UK. Mm-hmm. If you want local funding, typically you need to have a company with an address locally. So that's why I was recommending looking at the different locations. But yes, you are right. There's lots of NGOs and lots of other organizations that will fund companies in Ukraine on certain projects. Again, they're better led with our partners as opposed to ourselves, but it's very specific on the types of funding you're looking for. Mm-hmm. So there are opportunities is what I'm saying. Yes, there are opportunities.
Okay. Last question. Will it be possible to have a call with you just to...
Yes, and Karina will follow up with details. Yeah, no problem.
Okay, super. Yeah, thank you so much.
Pleasure.
Thank you.
Yes,
Thank you for the
as Alex has provided an amazing opportunity for all of the registered participants, each of the registered one will receive a possibility to get a consultation with Alex and with Jonathan, a colleague of his, to understand more on how to get to the UK market in your specific way. So I believe that there are no more questions. Alex, thank you once again for an amazing lecture, and thank you everyone for your participation and your time. See you soon, and good luck with the USF.
Thank you very much, everyone. Thank you for inviting me. Look forward to
Thank
speaking
you.
to you. Take care.
You.
Thank you. Have a good day.